All right, I'm going to give you 3 reasons on why you need to be buying a home in today's market and why there is immense opportunity similar to 2018. So stay tuned on this. I've got a lot of clients, family members, friends, coworkers that are sitting on the fence, right? There is a true home affordability issue right now, and that's totally understandable. But with that also comes some great opportunity for those that can stomach some of these higher rates and can afford these monthly payments. And there's some creative solutions to lower those short term to wait for these rates to settle down. So there's the 3 main reasons why you need to be jumping into this market. Number 1, which I just alluded to, are rates. And I know that they're at historic highs, but what that creates immense opportunity because you have less buyers in the market because of that home affordability issue. The next one is sale to list ratio. And sale to list ratio is basically if the home is $500,000 and it closes at a lower price, that's going to be under 100% sale to list ratio. If it's above that, it's above 100% sale to list ratio. What you want to look for is markets where it's under 100% because that creates opportunity to acquire seller credits or to acquire the property for less than what the seller is asking for. With that margin, that gap, there's opportunities to lower your monthly payment, lower your interest rate in the short term to just wait out these rate fluctuations and wait for those to go down. The third one is days on market. Days on market is a great indication of where the market currently is and how competitive it is. The more days on market means homes are sitting longer, which means there's less competition, which means you can do your due diligence rather than a year or 2 ago when days on market were a few days. You could not get an inspection. You had to waive your financing contingency. Buyers had to risk a lot to acquire property. So let's dive into rates real quick. I've got the US weekly averages here on Freddie Mac's website. As you can see, rates are at a historic high at 7%. However, I want to talk about 2018 because 2018 is very relevant and very important to today. And you need to watch my last video on why interest rates may have peaked to understand why this is very, very important. Because if and when rates go down, we're going to see very similar signs to the end of 2018, which is right here on the graph. At the end of 2018, rates hit 5%. I had a lot of my personal clients, a lot of my friends, a lot of people I know say, hey, pull my application, pull my pre-approval letter. Rates are 5%. They've gone up from 3.25. The home affordability, it just doesn't make sense. The payment shock is too great. I'm going to wait for rates to settle out. I said, no problem. You can totally sit on the sideline. With that, though, I saw opportunity. Myself and a few clients saw some great opportunity when those rates went up and there was less buyers in the playing field. Let me pull it over to a house that I actually purchased. At that time was the worst rate environment we had seen for years. I purchased this house for $350,000 on December 28th of 2018. This house I bought as a rental property is right next to the College Park and Ride in a great location. Spent a few $1,000s remodeling it, fixing up the landscape and inside the property. But because I got it for such a great deal at $350,000, because a lot of clients jumped out of the market and said, hey, these rates are too high. I was able to secure this home for an amazing price. And it was a home in a great location that I now rent out for a very good price. So because these rates went to 5%, I purchased this house at the end of 2018. At that time, a very high interest rate. Now anyone would take a 5% interest rate. But guess what I did in 2021 when rates went to 2.75? I refinanced that property along with a lot of my other clients that bought in 2018 that bit the bullet, refinanced when the rates were super low at 2.75 and captured all of that equity. Because if you look at the equity we gained at December of 2018, the median home price was $450,000. And when I refinanced at the all-time low of rates was July of 2021, the median price is $625,000. That's a $125,000 difference just like $350,000 to this 526, what my property is worth. That's about $175,000 as well. My clients that waited until 2021, right, July of 2021, missed out on that $175,000 of equity. Because more buyers jumped into that market, there was more demand, which drove up home prices because rates were lower, right? I secured that property at the height of rates and then refinanced when it was lower. A lot of my clients did that, or sold their property and used that equity to purchase their next bigger and better home, or they did a cash out refinance and fixed up that property. Okay. The sale to list ratio. So sale to list ratio is a very important indication on how you can negotiate with that seller. The sale to list ratio in Bellingham right now is 98.9%. All these stats are on Redfin, on Bellingham. You can look at your market, look at any resources that you want. I'm just using Redfin and Bellingham. So in 2018, right, you're sitting right around 100%. Right now we're at 98.9%, which means if that house, the median house right now is about 685. If you're paying 98.9%, I did the calculations, you're paying about $677,000 for that home. However, when rates were super low in July of 2021, you're at about 105% sale to list ratio, which means that home that was $600,000, about the median price then, you were actually having to pay $630,000. So that difference is about $47,000 of where the market is now versus where it was when rates were 2.75%. However, that margin, that 98.9%, that margin of where the home is listed, right, 685 to the 677, that $8,000 creates some opportunity to use some really creative loan program financing where you can do a seller buy down program where the seller actually prepays your mortgage payment for the first year, 2 years, or 3 years to get you a lower payment until rates come down, which if you watch my last video, we may have hit the peak in rates. So this is a very advantageous program right now to lower your monthly payment for the next year to 3 years until rates come down and you refinance. Also, you could just buy down the interest rate for the 30 years long term to get a lower interest rate to lower that monthly payment. Or you could pay off your closing costs or pay off your mortgage insurance. There's just a lot of creative ways to lower that monthly payment because of that sale to list price being under 100%. Days on market. Also, this one here, homes with price drops, 43%. Almost 50% of homes have price drops. That means that there is less demand, right? There is more homes on the market that they need to adjust their price. So there's more options and advantages for buyers than there were in 2020 and 2021. So let's go back up to median days on market. I don't know about you, but I like to do my due diligence when I'm spending $350,000, $600,000. Really doesn't matter. Any hundreds of thousands of dollars, I like to do my due diligence. Right now, the median days on market is 21 days in Bellingham. Bellingham is one of the most competitive markets in Whatcom County. So 21 days is still pretty quick. That is a 15-day gain, though, year over year. So that means a year ago today, homes were on the market for 6 days. You had to make a several $100,000 decision in 6 days. So a lot of my clients in 2020 and 2021 were having to waive their inspection contingencies and financing contingencies, which means their earnest money, which is the money that you put up towards the seller. A lot of times it's 1, 2, 3% of the sales price was at risk if the buyer does not perform on the loan or does not buy the home. A lot of my clients had to waive inspection, which means you don't know if that roof, is going to collapse. You don't know if the furnace is going to blow, if the hot water tank is going to crap out. You don't know what is going to happen to that house, or if there's mold in the basement or the crawl space. That is what the inspector does to make sure you know what is going on with that home. Also, waiving your financing means that if you don't perform on that loan, you lose your earnest money. With 21 days on the market, you can go see several homes. You can go to open houses. If you're from out of state, you can fly up here. You don't need to, at a drop of a hat, go see a house in an hour after work and make another decision in an hour if you want to move you and your 2 kids and your wife or your husband to a new home in 1 hour, right? You've got 21 days. So it leaves you a lot of opportunity to do your due diligence, make sure it's the right opportunity, drive by the house at night, in the morning, make sure you like the area, Go knock on doors and see if you like the neighborhood. What do the neighbors like about the area? Are they college kids, right? Are they family members? What kind of area do you want to be in? Is there a barking dog next door? You can do your due diligence now because you've got 21 days on market. So really the big advantages from the three of rates being higher, right? The median or the saleable list price and the days on market, the advantages really are there's less competition, which means that if you're a lower down borrower, you've got 3% down, 5% down, 10% down, maybe your VA, FHA that have those lower down payments, USDA, you have a shot in this market. In 2020 and 2021, there was so much demand and people had gained so much equity that there was 10 clients that would do 20% down and another 10 clients that would be all cash. If you're a first-time home buyer or a lower down buyer, you have opportunity in this market because there's less competition. Also, you have an opportunity to get seller credits to lower that monthly payment and lower that interest rate through some of those creative financing options. In 2020 and 2021, when that sale to list ratio was above 100%, there was no seller credits. There was no opportunity to do that. You had to pay 5% over that, right? 105% of the list price over that home, and you're not getting any seller credits or anything like that. Right now, there's opportunity to do that to lower your monthly payment. The last one is that equity gain, right? If you watch my last video, if we have seen the peak in rates, that is going to create opportunity right now. Because if rates start to go down, what is that going to do? That's going to create more demand, which is what we had in 2020 and 2021, is what we saw after 2018. When rates went up, it slowed down demand. People that bought at that peak in rates when demand was low, refinanced when the rates went down, but the demand was super high, but they already owned that home. So if rates go down again, we are going to see that demand pick up, which means supply will go down and less opportunity for you to secure a home. But you can still refinance from, if you have a higher rate right now and you secure that home, you can refinance when rates go down. You're not married to that interest rate. A lot of you may be seeing this video and say, great, Dylan, I know you're in lending. This all sounds great. Yeah, you bought a house in 2018. You're still buying homes right now. But what if home values go down? We're seeing home values go down. Well, that's a great question. But look at supply and demand again. If we've hit the peak in rates, which if you watch my last video and some of those inflationary numbers and some indicators we're seeing, if rates go down, it's going to create more demand again, which is going to create less supply, which is going to drive up home prices. Yes, there's cyclical markets. Home values go down, they go up, just like your stock portfolio. Real estate is a long-term gain. It's a long-term play. You need to build this for the future, not for the short term. If you're a fix and flip type person, you need to look at that market and you need to look at those numbers. But if this is a home that's going to be a roof over you and your kids' heads, the home value does not matter unless you need to refinance or sell. So as long as you can afford that monthly payment and stick with it, then it's a great opportunity. And if those rates go down, which a lot of these inflationary numbers are indicating they will, there's going to be opportunity in the future to refinance that at a lower price, but secure that home right now when there's opportunity and less buyer demand. If you have any questions, if you think that your clients, your friends, your families may benefit from this video, please share it. Please have them reach out to me with any questions. I'm happy to consult with people one-on-one and help them build a real estate portfolio. Thanks for tuning in. Please watch for my next video where I'm going to go over some creative financing solutions to use that seller credit, because that sale to list ratio is under 100%. There's opportunity to lower that monthly payment and lower that interest rate using the seller's money and not money out of your own pocket. Thanks so much. We'll see you on the next one.